everyone. Welcome to your Business Morning. This Wednesday, the 3rd of April. I am Bosun Nomafai. Let's get the show started. The new minimum wage and pension liabilities, which is being approved, will likely push Nigeria's budget 2019 headline figure to about 10.3 trillion naira from the 8.83 trillion naira presented to the National Assembly late last year by the President. And that was hinted on Tuesday by the Honorable Minister of Budget and National Planning, Udoma Udoma. Yesterday, the Minister of Finance and, of course, Udo Udoma in charge of budget and national planning, including the heads of the Central Bank, the Federal Inland Revenue Service, the Customs, the Debt Management Office, and others, met with the House of Representatives Joint Committee on Finance and Appropriations to finalize the details of the new year budget. Of course, Nigeria is still running budget 2018 until sometime in the middle of the year. So the deficit in the new year budget, which is 2019, which is estimated about 1.85 trillion naira, will be funded via new taxes and concessionary financing system under the Buhari's administration's privatization program. All of this will get to have the details as we move on. The Senate yesterday says it's looking to get the chamber to approve the budget in about a few days from now, technically around April 11 and the 12th. Before, of course, the Easter holiday. Meantime, yesterday, President Buhari rejected two key economic bills sent for his signature by the National Assembly. Of course, the number of bills were more than two, but these were the two key economic budgets. The National Housing Fund, which was proposed by the National Assembly, seeking to levy 2.5% tax on ex-factory 50 kg cement and 10% of banks and other financial institutions' pre-tax profit, has been rejected. President Buhari says the bill, as presented by the National Assembly, will hurt businesses and ordinary Nigerians. President Buhari also says no to the National Assembly's proposal to withdraw $1 billion from the excess crude account to fund the revitalization of the moribund Ajaokuta steel facility. Meantime, U.S. oil major ExxonMobil is considering sale of oil and gas onshore and offshore fields in Nigeria. The oil company is looking to raise about $3 billion according to Reuters report. Exxon exited Nigeria's downstream oil sector in 2016, selling its equity in listed Mobil Oil Nigeria PLC, which is now called Double One PLC, on the Nigerian Stock Exchange. And still looking for more revenue, the Nigeria's tax agency, the FIRS, says it's looking to rake in 750 billion naira in fresh monies from 55,000 identified millionaire tax debtors. Hold on, we have 55 million millionaire tax debtors, according to the FIRS. So the FIRS chief, Babatunde Fowler, says the agency is working to get these folks to pay appropriate tax to the Nigerian government, and says that the recent substitution exercise, which was done via banks, has netted 23.25 billion naira and now been extended to cover those whose turnover is in excess of 100 million naira. According to Babatunde Fowler speaking at the House of Reps on Tuesday, about 500 individuals, companies have complied with the plans, and the agency, the FIRS, is ready to go through the entire 55,000 millionaires, tax debtors, before the middle of this year, 2019, that is. Great story on the economic front. We'll talk a little more around all of this later on the program. But first, let's go through what's happening right now. The CSCS, the Central Securities Clearance System, is in charge of depository and making sure that the processing in Nigeria's markets, equities market space, go very well. But there are challenges and key issues in terms of risks, in terms of cyber security, in terms of investor protection. Simply put, it's all about how to protect your investment in the stock market. And of course, that's what the CSCS is talking about today. Let's get the CEO of the company to talk to us, live to us from our studios at the Nigerian Stock Exchange. Haruna Jallo Waziri is the Chief Executive and Managing Director at the CSCS PLC. Good morning, sir. It's good to have you on the program.
Good morning, boss, and it's always great to be here.
Thank you very much. We understand this is very busy with this conference going on, and you can step out for a few minutes to attend to this interview. We appreciate that very much. But first, let's go through what do you consider as the emerging challenges and risks of cybersecurity in Nigeria?
Let's start with the statistics that has been put out there regarding information security or information technology security. My understanding is that by 2020, there will be 200 billion, items that will be connected to the internet, which means there are potential 200 billion, ways in getting into any, server across the world. And we at the CSCS, having built a robust system that would ensure, like you said, ease of doing business within the capital markets, have also, are exposed to that particular market or that particular space. So what we are trying to do is ensure that, we put the right infrastructure in place to protect our market as it is. So the essence of what we're trying to do today is, sensitize the market around why, it is important that people put, cybersecurity on the top of their list in terms of priorities for how to, do business in Nigeria.
So, Mr. Waziri, how dynamic and evolving are what you call cyber issues, challenges and risks around the world, in particular in Nigeria, as we get as a frontier market with our financial system, banking, stock market, insurance, pensions, everything else linked, fintech linked with the global space?
So let's start with how you do business today. You as Boston, I'm sure if I pick up your phone, you have multiple apps that you use in doing transactions. Whatever bank you use has probably developed an app in which you use your phone to do transaction. What it means is that there's an API that the bank has that allows for your phone to call the servers of the bank to do a transaction. Now, if anybody wants to try and do anything to the bank, you are an access point. So somebody can put a malware or something to try and reach the bank. Same thing with the CSCS or the capital markets. What we've done at the CSCS is we've developed an app as well. We have begun to expose, the data we have or the servers we have or the system that we have to third parties where we have an API which they can call to begin to query those servers. So what it means is that, Nigeria is no different. Our financial markets are no different from what others are doing. So, we have to begin to prepare for, possible, threats or attacks from malicious people who will try and infiltrate into our systems and cause harm. So, yes, it's no different. Yes, it's happening here right now. And, we have to talk about it. We have to put plans, to be able to ensure that we protect the assets that we have from a security perspective.
Yeah, the CSPS PLC has come a long way since the early 90s or mid-90s when your organization was set up and you specialized in capital market. But beyond that, you've also done a bit on data and all of that. What is the ecosystem or cybersecurity system that the CSCS is talking about, please, here, and unveiling and sharing with the broader market, with market operators, to bring everybody on board for this?
So, as we begin to fully automate, as we begin to have what I call complete STPs with our participants, which include brokers, registrars, custodians, and even third parties who want to do business with us from an information perspective. One thing that's very clear to us is that we have to prepare the ecosystem to the fact that, as we expose our internal assets to them, they have to begin to protect themselves as well, because that's another way of, malicious intent coming to us. So the whole idea about having these discussions is to sensitize our ecosystem around the need for them to protect themselves, because if anybody wants to get to our assets, they would be the first port of call. Like they always say, you are as weak as your weakest link, and if you have any intermediary or participants that does not have the requirements for what I call basic cybersecurity tools, then we are also at risk. So the whole essence of these particular discussions, or the discussions we're having today, is to sensitize them around the risk that they pose to the market if they don't, put the right procedures and systems in place to protect themselves as well.
Yeah, Mr. Waziri, technology is always changing. The bad guys want to take money, they want to take investment, that's what they want to steal. But this prevention, cybersecurity, building firewalls around the marketplace and the operators and institutions and assets will cost money. So, how much is this costing, as it were? And of course, it's not a one-size-fits-all. If you don't close, you keep two eyes open these days, not one eye open when you're talking about cyber insecurity.
So, I think the most important thing around cybersecurity is knowledge and knowledge sharing and understanding trends more than the equipment or the softwares that you buy. You can have the best servers, you can have the best firewalls. Now, if they're not updated, if you don't have people who are skillful enough to actually man those firewalls to begin to understand the new threats that come, those guys are going to always try and circumvent. So I think the most important thing is not how much you spend in terms of acquisition, is how much you put in place in terms of the people that understand what is necessary for you to do it. Yes, the trend is that the tools that you require to do extensive cybersecurity can be expensive. But right now, I think the prices are dropping significantly. There are alternative solutions that actually give you those protections that you need. But I think it's more around the processes you put in place, the little tools that you require, which is essential. And, from what I call a reasonable budget, I think you can easily protect yourselves in the market. Compared to the assets that you have, I think the spending is worth it.
Okay, I find one. This goes all the way to the C-suite, isn't it? For the board and management. This is not just about the guys in the ICT backroom office. This is boardroom situation, security, cyber security.
Boston, I think you've hit the point very quickly and directly. The important thing is that cybersecurity has to dovetail from your strategy as a board. You have to make it a board strategy. You have to, make it an objective of the board to say we're going to have a plan that would ensure that we protect ourselves, and it starts from the top. And once it's a policy or is an objective from the board, it should be able to cascade down to management. Management should be able to execute the board objective by defining initiatives and projects and specific to around cybersecurity. That is the way to actually achieve complete cybersecurity, position, if you like, from an execution perspective. It starts from the board. You're correct.
Thank you very much. This is a precious executive time you've given us to kick off the show this morning. Thank you very much. You need to get back upstairs into that conference room. Thank you so much. Haruna Walu Jaziri, Managing Director and Chief Executive Officer at CSCS PLC. So that takes you straight to Market Street. Yesterday, the stock market, we lost about 1% on the broad index. If we continue on this trajectory, we're likely going to dip below the 30,000 before the end of the week, because Tuesday took us to the doorstep of 30,226 on the composite index. That is taking us a little bit lower. So what's biting investors' sentiments? We're going to get an analyst to give us a mindset of what is going on right there. Despite the news, despite the earnings, the market's still down. Bring the numbers in here, folks. Let's look at the equity cap yesterday. Much lower than when we finished off on Monday. So it's been a steady decline in our headline figures to 11.35 trillion naira. Flip that over. Look at the primary market indicators, and you can see a very steady, at least good volume, decent volume, more than 300 million ordinary shares, 4.53 billion naira, 4,000 transactions. That was active trading, but it's all more to the downside. That's what the next page will show you, with the banking sector down 1.11% on the second day of the Access News Bank merger, with Diamond Bank and the market taking those earnings, what you take it like, taking it on the chin, as it were. And that is what you're looking at. So that's the negative one. Consumer goods was down 3.84%. Dangote Sugar came in with a bit of a disappointing numbers, and the market beat that. Then you have industrial goods, because Dangote Cement crept up about 1.05%, giving that sector some fillip. Insurance sidestepped their cousins, the banks, by almost 1%. Green finishing. Then oil and gas came in 1.75% despite decent trading on some of the stocks in that space. And that's where I'm going next. So flip it. Let's see. Let's go to the oil and gas, folks. How quickly can we get that out? Great. Here it goes. Fine. So you got 40 oil there. One of the oil and gas majors down by nearly 10%. That dragged the market. Owando, investors still digesting those positive numbers, but the broad market sentiment was negative. So that dragged Owando's positive earnings down 7.84%. The rest of that space were largely neuter. If you flip that over, you just find a little bit of gray numbers there. Eternal Oil, okay, that's it there. Okay, that's also unchanged on the day, about 150,000 shares traded. Okay, let's go to the unlisted securities market where a bit of a soft landing there, 0.06% on the US head. That's the unlisted securities index reading. But the market value is still holding that strong at 528 billion. A very decent day also in terms of volume, 160.1 million for about 8.21 million naira. So that should be a million naira there for yesterday's market, 13 transactions. And if you put in through the fixed income space, and that's where investors and traders and everyone's looking at the primary market auctions on treasury bills by the central bank. Today we're looking at close to 100 billion that the central bank will throw into the market space. So we, at the secondary window, via the FMDQ, is a little bit smaller than the previous days. We've seen, since Monday, it's been triple digit, since late last week, to be more precise. But Tuesday came in into single digit in total value, 70.68 billion naira. And of course, you see the discount highs there. The yield there beginning to taper a little bit from 13.12. Now you're seeing June 6, 2019, treasury bills at 11.95%. The bond market is not significantly different today. The debt office has announced the calendar for the April savings bond, which of course gets open this week. You can check that out as well. So let's get a bit of analysis and insight into the equity side of this. Let's get Robert Thomas today from AfroInvest, who is the head of research. Robert, good morning. It's good to have you right there downtown in our studios. Good morning.
Good morning, Bosin.
Great, great. Let's hit the ground running. You have news around Access, Diamond Bank merger completion. Great news. All shares are crossing. Some investors are making money. Then you have earnings coming through. Yet investors seem to be what we call in a local parlance, sit down look. What's going on here?
Well, I think it's a broader reflection of what's the developing story within the larger picture of the economy. But again, from our end, we are counting scores now post-elections. So it's been 27 days of trading, and out of the 27 days, we've only had about 9 positive days of trading. About 18 days have been negative for the market, which is what, of course, is accounting for the over 3% year-to-date loss that the market has suffered. But to the substance, we think that the market is only reacting to the development in the larger economy. Remember that while the election was approaching, the signal in the market was most foreign investors were trying to be cautious of taking position ahead of the political risk. But now that has since dissipated, but we've not seen the much of traction that is expected, even though we know that there have been funds flow into the market, but basically into the fixed income market, which is much more attractive to some investors at this time. And again, from the fundamental perspective of the economy, what investors are looking at are, policies that could largely trigger, development within the macroeconomic space and bode well for the companies. And in the horizon, it seems like there are no bullish market, reforms or policies that could, give investors that for now. But for the earnings that we've released so far, for the earnings that we've seen in the market so far, we've seen that the performances have also reflected the developments in the economy. But investors have reacted differently, even
Robert,
though when you track average yields of those companies that have released the
Robert, a quick one here.
Yep.
Yes, Robert, let's take a break. We'll get you back into the conversation. When we come back, of course, we'll discuss the wider part of the fiscal issues is the budget and all of that. So let's put all of that together. Stick around. We're back in two. Thank you.